we've got an earnings alert. Shares of Tilray trading after hours lows after reporting results. Let's get to Aditi Roy in San Francisco with the details. Aditi.
Melissa, shares are down more than 7% right now. And, Tilray's been making a lot of investments at home and abroad. That's putting more pressure on its gross margins, and it contributed to its bottom line miss. But the company says those investments are resulting in big top line growth, which it projects will continue. Total kilograms sold more than tripled to more than 5,500 kgs from last year. Gross margins increased to 27% quarter over quarter. The company says gross margin continues to be impacted by increased costs from ramping up cultivation facilities in Canada and Portugal and acquiring third-party supply. CEO Brendan Kennedy was just on our air telling CNBC they don't want to miss out on growth opportunities at home or abroad.
I think, the way we look at this is it's early days. We're continuing to invest to build long-term value for our shareholders. If we looked at individual countries like Canada, for instance, we could be profitable there within 2 quarters. But when we look at one of the larger markets, such as Europe, it's still an opportune time to invest.
Some other company highlights: Tilray has increased its cultivation space in Portugal and Canada and has entered the U.S. CBD market with a hemp product from Manitoba Harvest. Analyst reaction is already starting to come in. Brett Cooper from Consumer Edge says, "We continue to believe that profitability for Tilray and others is a ways off." Melissa, back to you.
All right, Aditi, thank you. Let's trade this. And before we get to that, a quick disclosure here. Tim does have a cannabis ETF, CNBS. Tilray is a component of that ETF. All the components are listed on our website, fast.cnbc.com. So 2 quarters profitability in Canada, Tim. What do you think?
If they choose to. If they choose to. So look, Brendan Kennedy has done a fantastic job at Tilray at positioning this company with some very impressive JV partners, whether it's ABI, whether it's Novartis, whether it's Manitoba, whether it's Authentic Brands. But look, the reason we have a very underweight position in our fund, this relative to its overall market cap in the industry, is they're not doing anything in Canada. They're not necessarily growing, and in fact, they're a distant, probably 4th or 5th player. I think on the margin side, the path to profitability is still unclear. While these relationships for this company, I think, are very important, and they provide optionality, and I think it's a name as part of an overall portfolio you should have some exposure to. But here and now, it's hard to see where these guys are competing with the other big LPs in Canada in the cultivation market and straight to the consumer.
All right, let's get more on Tilray's quarter and bring in Rob Wertheimer of Melius Research. He's currently underweight Tilray. Rob, great to have you with us. You're actually negative the entire sector, as I understand it. You have been since May, so that's sort of the context of your comments here. But what did you make of the Tilray quarter? It looked like they spent a lot in order to expand their facilities.
Yeah, they did. Now, so I didn't think the quarter was all that bad at first glance. So there's a couple things happening. I think the cannabis market is transitioning to a, hope and a dream to let's see what we can actually deliver on results. And we've seen that in the stock price over the last few months. And the results have a couple components. On the revenue side, Tilray did pretty well. I mean, they were selling more product. I think volume was up 85% quarter over quarter. Year over year, we've got some differences in the market. But versus last quarter, that's pretty good growth. Pricing was a little bit weaker than we thought, and that's a bit of a concern. But the revenue side, they're actually doing okay. And as you mentioned, and your reporters showed, you have had some investment, and that's fine. I think it's hard to really predict EBITDA and net income with great precision in an industry that's highly transitional, et cetera. So margins are a little bit weaker, maybe, yeah. But overall, the revenue wasn't so bad.
When you take a look at markets beyond Canada, Rob, which are the important markets for Tilray to really serve?
Yeah, what day is it, I guess? They're doing a good job in trying to expand, as you know, into the U.S. When the U.S., sort of sorts out the various complications on what we can do with CBD marketing, whether you can, have it for consumption or just for topicals or whatever. So that's obviously the biggest and most important market. And then Tilray is also planting a bunch of flags over in Europe where it's lagging the U.S. in the legal environment, and we'll sort of see how much that pays off in the near term.
There's so many stocks, Rob, where you sort of say, this company is in growth mode, so it's going to spend money in order to grow, and it's going to spend money in order to grow revenues. Why isn't that the case for cannabis stocks? Or is it, and it's not just for it's not for Tilray this quarter?
No, I think to be fair, I think it is the case, and I think that I think they have grown revenues. I think that's good. I think that they've had this strategy a little bit more of trying to source in product in the wholesale market, and for whatever reason, the industry hasn't delivered as much as it could have over the last few months, and so they've lagged a bit. It's a fine strategy. It just had some tightness, and so they're coming along. And I think the margins are not yet indicative of what they'll be at maturity, and so I'm not sure that's overly a focus. The real focus is, are they getting their brands out there? Are they putting product on shelves, and are consumers liking it?
Mm-hmm. It seems like the next quarter might be a little trickier, or maybe the quarter after that, when you lap comparisons with the legalization of marijuana and for adult use in Canada. Is that a concern for you, or no?
Yeah, there's a couple things. It's a fair point, and that's one reason we didn't look at that year over year right now, because adult use wasn't legal in Canada a year ago, and so so it's obviously good growth rates, right? But quarter over quarter, they're selling a lot more product, and that's a good thing. The thing that we do have a concern with is that Canada has had this staggered approach to legalizing, and not all products, edibles, beverages, some consumer vaping is not yet legal in Canada, and it will be. And so I think there's a lot of hope in the market that will be transformational right when it comes online, and we're a little bit more skeptical on just how fast that will bring in new users who really consume a lot. That's a concern for 4Q and onwards.
All right, Rob, great to speak with you. Thanks for your time. Rob Wertheimer of Melius Research. Aurora Cannabis, by the way, isn't overweight for Rob. Where do you see these pot stocks going?
I mean, when you look at this one in particular, every single rally for the better part of the last 12 months has been sold. So if we're going to see a trend change here, we have to hold recent lows. The stock prints down after hours. 39.50 is the July 30th low. That has to be held if this stock is going to start the process of putting in some type of a bottom.
Yeah, listen, in the last 5 years, we've seen groups like this. We've seen it started 3D printing. We've seen so many mini bubbles. I mean, to be very honest with you, we have. and Bitcoin, every single one of them has popped. This one, if you look at Tilray, it popped. This is a stock.
But Tilray was unique because of their first U.S. IPO, because of the liquidity dynamics. It squeezed up to $300 just on that alone. I mean, you are right in terms of bubblicious valuations, but you can't compare Tilray as a stock to the sector.
Well, let's talk about it in 6 months. I mean, to be very frank, if I were to invest in this space, I would invest with someone like you who's spending a lot of time with these companies doing that. So I think buying one of these companies, I just don't know how anybody could value them given the market caps they have, given the regulatory headwinds that they have, which is unknowable. Like, we're talking about Canada. We're talking about Canadian usage in Canada. I know, but it may never come federal here in the U.S. and then you're going to be sticking. Tilray's it's like the options market. You have theta that just decline, just decays. That's what's going on in an equity like Tilray right there. Yeah.
Well, I'll say this. Valuation at 22 times 2019 EV to sales, it makes no sense. And so Dan is right to push back on it. I would just say regulatory is probably a tailwind for the sector, even though it's a complex regulatory environment. But if anything, there's a lot more doors to be opened than to be closed.
Maybe.
So, I mean, and I think what they're doing in a place like Germany, again, I don't think Tilray is the name that you go bonkers on. I think what you do, though, is you look at those companies that have facilities where they have GMP certification and can get into places that are really growing markets, and that's why you do your work.